The Pakistan's stock market is in turmoil and on edge. On April 24th, the Pakistan Stock Exchange opened to chaos. The KSE-100 index nosedived over 2,500 points, which is about over 2% within the first 5 minutes. By midday, some calm returned, but the index still hovered nearly 1,000 points down. Now, this sharp decline was mainly driven by two key factors. Number one, geopolitical tensions. The PSX dropped sharply after India imposed tough diplomatic measures in response to the recent Pahalgam terror attack. Escalating tensions between India and Pakistan have led to increased investor anxiety and a subsequent market sell-off. Number two, economic concerns. On April 22nd, terrorists opened fire on a group of tourists in Baisaran Valley near Pahalgam, Jammu and Kashmir. The carnage left 28 dead and over 20 injured, most of them non-Muslim civilians. India responded strongly, launching a large-scale counter-terror operation in the valley, suspending the Indus Water treaty, downgrading diplomatic ties with Pakistan, and sealing the Wagah-Atari border. Recently, the International Monetary Fund or IMF also revised its GDP growth forecast for FY25 downward to 2.6%, signaling potential economic challenges ahead. In fact, recently, trading at Pakistan Stock Exchange was suspended for an hour on Monday, that is April 21st, after the market plunged over 8,000 points. The sharp decline was driven by concerns over the imposition of new US tariffs and mounting fears of a global recession. The Pak market's sharp decline underscores the sensitivity of financial markets to geopolitical events, especially in regions with a history of tension. Back home, Indian markets remained largely unaffected in early trade on April 24th, though investors are closely monitoring the situation. As diplomacy hangs by a thread and markets react in fear, one thing remains clear: the cost of terror is always human. And in its wake, it leaves us with lost lives, incomplete stories, and grieving families. Well, that's all for today. Keep watching ET for more.